Hey everyone, welcome back to the Dental Wolf YouTube channel. So this is the second part of our financial statements series, and in this series we will be talking about balance sheets. So if you just remember real quick with me that we have our three amigos of financial statements. We have our income statement, our balance sheet, and our cash flow statement. And like I said before, we today will be talking about the balance sheet. So like the name suggests, the most important part of a balance sheet is that it must balance.
Better learn balance. Balance is key. Balance good, quality good, everything good. Balance bad, better pack up, go home. Understand?
So you could look at a balance sheet as being split into two parts. So there's a left-hand side and a right-hand side. And on one side, we have assets. And on the other side, we have liabilities and owner's equity. So this could be looked at in a mathematical way as well. You could say assets equals liabilities plus equity, or the equity is equal to assets minus your liabilities. One of my favorite ways to look at a balance sheet that makes the most sense to me is to look at the left-hand side as what you own and the right-hand side as how you paid for it. So we can think about this in the terms of a house to understand this a little bit better. So let's say you bought a house worth $100,000 and you used a mortgage or a loan of $60,000 to pay for part of it, and you paid $40,000 in cash. So your asset, in this case, the house, is worth $100,000, and your liabilities or your debt would be $60,000, and your equity in the home, what you actually own of it, is $40,000. So you can see that in the example of a house, you have a balance between the two sides of assets and liabilities plus equity. So diving down a little bit deeper, you have two types of assets. You have current assets and fixed assets. Current assets are assets that could be sold within a year. And fixed assets are assets that would take longer than a year to sell. So this concept is really important when we start talking about liquidity. And we won't dive into that now, but liquidity is an important concept for all business owners, and it's something that you should understand. On the other side of the balance sheet, in a similar way, you have current liabilities and long-term liabilities. Current liabilities are debt that needs to be paid off within a year, and long-term liabilities is debt that is due in more than a year. So current liabilities include things like accounts payable and payroll. So accounts payable, that's probably a new concept for you, and we'll talk about this a little bit later, but it's basically short-term debt that you owe on things like supplies. So let's say a supplier gives you, a certain amount of supplies, and it gets to your office, but you still have to pay him. And that is what we'd call an account payable. Also, if you notice under long-term liabilities, we have an item called working capital. Oftentimes, your bank will give you what's called a line of credit. So you can think of a line of credit like a credit card. It's basically an open line of debt that you can have without applying for a new loan every single time you need money. And so when you use that, you have working capital debt from that line of credit. So really quick, before we end this video, I just want to introduce this important concept that kind of ties in with the balance sheet, and that is the concept of goodwill. So in a mathematical standpoint, goodwill is basically the difference between the book value of a practice and what the practice was purchased for. So it's basically things extra over the assets. From a theoretical standpoint, goodwill is the good standing of a practice within a community. So it's the trust, it's the likability.
Do I need to be liked? Absolutely not. I like to be liked. I enjoy being liked. I have to be liked. But it's not like this compulsive need to be liked, like my need to be praised.
It's what draws people into that practice within a community. And you will end up paying for that goodwill when you buy a practice. So for example, let's say you're a patient and you're looking for a dental office to go to. Well, you might choose a dental office on a number of things. But probably on the top of your list is you're going to choose a dental office where you trust the dentist, you like the staff, you like the environment, you feel comfortable there, right? So all of those things play into the goodwill of that practice. Goodwill is also often referred to as blue sky. So anyway, I hope you guys liked this video. I hope it helped you understand balance sheets a little bit better. I hope you understand assets, liabilities, and equity a little bit more clearly. If there's anything that you have questions on, please put it in the comments below and we'll see if we can address it in a future video. And on this video, I want to make a specific request. I know most dental students have Facebook pages or social media sites for their classes. Please share these videos on your class pages. I'd love for this to get to more dental students. And if you have a business club, I'm sure a lot of you do, share this within your business club. This is exactly what this was intended for, was to help dental students understand more of the business side of dentistry. Anyway, I hope this helped, and I will see you guys on the flip side.